Hey everybody, Chuck Barone. It is Tuesday. I got to read this, April the 25th, 2023. Big day today, guys. Interesting stuff happening. Market giving us signs of what's to come. A lot of data to go over. Lots of stuff today. Before we start the show, though, as always, just want to welcome everybody. Thank you guys for your support. Thanks for watching the videos. We appreciate you guys. Markets today. Well, the markets did not have a good day. We're getting bad news. All of this kind of working together. I think I've been, not to blow my own horn too loud, but I think I've been seeing things pretty clearly here. And yesterday I was saying on the show, I'm pretty much convinced now we're going to have a recession. I think the market catching up pretty quickly here. So markets today, not good, not healthy. Stock market down. Dow down 344 points, 33,530. S&P down 65 points, 4,071. The NASDAQ down 238, yuck, 11,799. These are horrible numbers, man. The market's looking very unhealthy right now. And we're going to get some news today after the market. Microsoft and Google will come out with their earnings. So actually, Microsoft already came out with good earnings. But today's stuff, UPS today, reporting some stuff in their earnings report with some bad news for the economy. Apparently the deliveries are down, people buying less, maybe shippers packing more into one box, I don't know. But UPS guidance showing the consumers slowing down their online purchases. Recession fears, of course, lead people to believe we're going to have a pretty quick turnaround in interest rates, so the bond market rallies like crazy today, yields falling like a stone. The 10-year drops 12 basis points, 12, to 3.39%. The 2-year drops 21 basis points, wow, big move for the 2-year, down to 3.93%. So you got the yield inversion narrowing. You got the 2-year below 4% now. I think that pretty much brings then everything on the yield spectrum down below 4%. Bond market flashing rate cuts or belief in rate cuts. We'll see. It's crazy time though, man. It's really something. So like I was saying yesterday, the pick your poison moment is coming for the government and the Federal Reserve, where they're going to have to decide. Is it going to be inflation we're going to fight? And the economy be damned? Are we going to save the economy? Inflation be damned. Not a happy choice. I'm glad it's not my job for once. Dollar today up. Rallies, of course, believing interest rate hikes coming. We'll get their interest rate. So the dollar reacting completely differently than the bond market does. Dollar up 101.87, pushing back above 102. There we go with the dollar, right? That's not really much earth-shattering news. It's still in that same trough. So the up and downs, these little up and downs, don't make much difference. Metals today, mixed today. I was disappointed a little bit, actually. Gold rallies nicely, up $8.50 today, $1,997.40 per ounce, knocking on the door of 2,000 again. Silver, though, falls today, 17 cents. Breaking support at 25. The last time I saw, I'm sure these metals markets trade longer than the stock market does. $24.97 per ounce of silver. Hopefully silver will rally back above that. I guess this is anticipated. Breaking through these round numbers, psychologically difficult, as evidenced by gold and silver. I really believe both of these have a ways to go to the upside. Today, just a glitch, right? Oil today, as I've been telling you guys, in that trough, down pretty good today, down $1.68, basically giving back all the gains it had yesterday, $77.08 per barrel, firmly in the middle of that trough between 75 and 80, where it seems to be most comfortable. I think that's where it's going to stay, and I think if oil has a breakout, one way or the other, it's going to break out to the downside. Bitcoin today rallies up small, $488, 27,903. Breaks a few day losing streak for Bitcoin though, so nice to see them have a little bit of support. I've been reading up on my cryptos, guys, and I'm going to have a little bit of talk about that, but not prepared yet, not even anywhere near it. But I was reading an interesting article to cheer you crypto fans up, saying there's a lot more institutional interest in some of these cryptos. Ethereum, I'm not exactly sure how you pronounce it, but that one seems to be the one that institutional investors are starting to look at. If they start buying, wow, bombs away for cryptos, guys. It could be a huge rally, huge. Okay, news you guys need today. Well, we knew today was not much for data coming, right? So we did get the new home sales. New home sales, boom, jumping 9.6%. Makes it look like the real estate market's healthy. I tell you guys it isn't. And I'll tell you why new home sales jumped like that. We know there's demand for housing and people having difficulty dealing with the down payments, the new rates, and the payments caused by those rates because house prices stubbornly high. New home sales spiked because there's no existing homes on the market. We're having a shortage of people wanting to sell the houses they're living in, which is there's demand for housing, so it's forcing buyers to new builds. Plus, builders have been putting incentives. Now they're kind of taking those back, but they've had some pretty outstanding incentives they've been offering people to buy new houses, up to $10,000 in upgrades or closing cost help or down payment help. I mean, it's just been, banks can do stuff I can't do, and builders apparently can do stuff banks even can't do. So banks been buying business, builders been buying people's mortgages that way, and new homes sales up. Now let's see if that's sustainable and for how long, because now builders taking those incentives away, firming up pricing, not being as liberal, for lack of a better word, in their negotiations with buyers. So we'll see how long that stacks up. Interesting thing today, consumer confidence report comes out, and this report shows consumer confidence just tanking, crashing out, making everybody now, along with you see the bond market and other things in the economy, this report really spooked the market, just strengthening the recession fears everybody's starting to have now. Americans talking in this report, they're literally now starting to hunker down for the worst. Finally, listening, saving money, putting off big expenses. Consumers say they're going to postpone big purchases, starting with the biggest move down is for major household appliances. So not good news for manufacturing in the U.S. If they're still manufacturing any household appliances here in the U.S., I'm not even sure about that, but that one dropped down to the lowest level, like down since 2011. So since the big kablooey back in the day of the real recession, that's where demand is going to be for major household appliances, right? Consumers also say vacations are out, new car purchases are out, more debt is out. Consumer confidence, the index fell to 101.3 from 104. Economists expected the index to be unchanged. So when they see a drop like this, well, it spooked them out big time, right? And the people most pessimistic about spending money, consumer confidence, people over 55, so older people, and households making more than $50,000 per year. So the more affluent, older people, I guess, experience understanding what's coming, hunkering down, putting off purchases, stashing their money. And we've been talking about this on the show. I've been telling you guys yesterday that consumers are pretty much at the end of their rope, right? So I'm reading this today. It said 5 million renters, terminally late, basically in the process of eviction right now on their rents, and the average renter owes well more than $2,000 in back rent. So this is just, now we're going to see, last time around and back in 08 and 09, it was people who bought houses they couldn't afford getting kicked out. Looks like this time around it's going to be renters people renting, rents flying through the ceiling. So now this time around, it looks like renters going to be the ones getting kicked out. The government is completely incapable of doing anything to help us, guys. Those guys can't get out of their own freaking way. And I don't know how much better state government is going to be. That they pretty much follow the lead of the big cheeses up in Washington, so not exactly inspiring a lot of confidence, right? And this, I got to comment on this. Now, this is no way political, so don't go tripping on this whole left, right, red, blue, Dem, Republican. Don't go back. This is not what this is about. But I got to comment on this debt limit, the debt limit thing, where we're basically our government is breathing fumes. We need a debt limit increase to pay for the bills we've already incurred. This has nothing to do with future spending. These are to pay bills that they've budgeted in last year and the year before that. And now you got both sides digging in, trenching. It's looking like World War I, where they're just going to lob bombs at each other in trenches. So the left, Biden says he wants a complete bill, will not sign anything that has any kind of conditions attached to it. The Republican House insisting spending cuts, definitely $5 trillion worth of spending cuts, be part of this raising of the debt ceiling. Guys, this political gamesmanship, I get both sides have their points to make, and I get the Republicans are probably right. We need to cut some of this spending. We're just bleeding money all over the place, right? But this is not the way to do it, man. You don't point a friggin' howitzer at a guy and say, negotiate with me. That's not how you negotiate. These guys need to get it together. Okay, so they were, actually, I was reading an article, one of the Congress critters was saying that they're probably going to need a crisis to actually get something done because both sides are so dug in. The House has to, everything originates in the House, so the House has to be able to pass this, right? And if they're entrenched, even if they pass their bill with $5 trillion in cuts, the Senate's not going to pass it. Biden insists he won't sign it. Biden wants a clean bill. The House is not going to produce that for him. So here we are at this impasse. Well, it kind of reminded this congressman of 2008 when they were arguing about TARP. Remember when they had to put in $800 billion to save the banks and Wall Street? And he was talking about how they were fighting, both sides entrenched, neither side wanting to budge, and they actually shot the bill down, right? Tanking the Dow 7% in one day. The NASDAQ 9% in one day. The stock market overall losing $1.2 trillion in one day. Okay? Now this, the debt ceiling, a lot more important than TARP was then. The United States, the credibility of the United States is the entire thing that props up the dollar as the world reserve currency, the belief in the United States as the place to do business. This is not something to be trifled with, man. So these knuckleheads need to figure this stuff out. But in the meantime, guys, if they can't figure this, man, if they actually let the United States default on their debt, that would pretty much be the death knell of the dollar as the world's reserve currency. You'll see a spike in commodity prices and interest rates like nothing you've ever seen before. So knowing that to be true, I would say not a bad idea right now to maybe hedge a little bit and put some stuff, move a few pennies around and think about hedging just in case they go over the cliff with this brinksmanship. Tough times coming, guys. Recession coming, high interest rates, stubborn inflation, political crazyism, right? Nothing, in my mind, going well. We need to fix that. Anyway, guys, do what we've been telling you. Save your money. Be very, very cautious taking on new debt. Spend your money prudently. I'm not saying don't buy things, don't spend things, don't live a life. I'm saying do it cautiously, right? Try to beware of the impulse. That's where people spend their money. And, well, watch out for the impulse buy. You know, spend your money, but spend it wisely, right? Invest your money. If you have money invested or are investing, invest the money cautiously. You know, there's probably going to be a pretty big, if we hit this recession and it's bad as it looks like it could be, then this stock market is going to tank pretty good. So be careful there. You know, commodities prices, depending on the seriousness of this dollar and the brinkmanship on this debt ceiling, you know, commodities could be just a rocket ship, right? On the other hand, bonds, if rates spike up, you don't want to be anywhere near bonds, especially with bond market now believing rate cuts are coming, lowering rates. So a crazy, calamitous, nutso, dumbass-filled world we're living in. We're going to try to give you guys the news you need every day to prepare yourselves for what is and what's coming. That's it for the day, guys. We appreciate your support. We appreciate your likes and your shares and all the things you guys do every day. Tomorrow starts the big data dump. Tomorrow, Thursday, and Friday, big days. We'll be here to bring you guys all the news. Until tomorrow, guys, have a good evening and take care. Thanks.